What's up, Mancos? It's your boy Carlo back at it with another video. Today I'm going to tell you how to get started investing in the stock market as a complete beginner. I'm a 24-year-old engineer with an MBA, but that doesn't make me a financial advisor. So that's just a disclaimer. However, I've been investing in the stock market since 2016 and I've grown my portfolio from $5,500 to now almost $50,000. So I've come a long way and learned a lot of things, and that's why I want to share this video. Now, the first thing we need to learn is what is investing and what is a stock. Investing, to simply put it, is when you put your money into an asset, expecting that asset's value to increase in the future. And when you do sell that asset in the future, you make a profit. So for example, you were to buy $1,000 of, I don't know, a Pokemon card. And in the future, let's say 20 years from now, that Pokemon card's values went up to $3,000. Well, guess what? You just made $2,000 in profit doing nothing except waiting for its value to go up. So that's what investing is. There are many things you can invest in, such as real estate, options, bonds, Pokemon cards, and even the most popular one, stocks. Now you're probably wondering, what is a stock? Well, a stock represents an ownership of a corporation. Think of Google, Tesla, Amazon. Those are some of the largest corporations in the United States or even the world, and you can own a piece of them. So think of Google as a giant pie with 1,000,000 slices, and each slice represents an ownership of Google. The more you buy this slice, well, the more you own a part or a piece of Google. Well, that's what stocks are. They represent the ownership of that corporation. So the more stocks you buy, the more ownership you have on that company. And that's why they're called shares. It's because we're sharing the ownership of that company. There are other investors in the world that also owns a piece of that business. Now let's look at a Google stock. If we were to look 5 years ago, let's imagine it's 2016 and you were to buy a Google stock, you would have probably bought it for around $700. Now fast forward 5 years later to today, that Google stock is now worth over $2,000, meaning you would have made a profit of around $1,300, and that's just in the span of 5 years. Now that I've explained what investing is and what a stock is, I'm going to tell you why you should invest. Some of you might say that you're too old, you're too young, you don't have enough money, you got bills to pay. I want to buy other things that make me happy, like vacation. Or that it's too risky, I might lose a lot of money. I don't need to get rich. I don't want to get rich. But that's not the point. Those are not great excuses. You got to look at the bigger picture. When you invest your money, you're making time and money work for you instead of you working for money. Over time, you're not going to be able to work and make money. And some of us don't even want to work to make money. So how can you live your life without worrying about money? Well, you can do that by investing. When investing in the stock market, you get to own great companies like Tesla, Amazon, just to name a few, and they will do the work for you to make you more money. Well, if you choose not to invest, that money is just going to go down because of inflation. And it's well known throughout the whole world that over time, the stock market rises, and even if you buy at the peaks and sell at the lows, you are more likely to make a profit just by investing over time. So what are you waiting for? You should definitely invest as soon as you can. Now that I told you why you should invest, I'm going to tell you when should you invest. There's a quote saying that the best time to plant a tree was 20 years ago, and the next best time to plant a tree is today. Well, that applies to stocks. The best time to buy a stock was 20 years ago, and the best time to buy a stock is today. So we should try to invest as soon as possible because of the term called compound interest. I'm going to explain compound interest by giving an example of if you were to invest $1,000 every month for the next 10 to 40 years. The first 10 years, you'll see there's not a lot of difference between investing and not investing at all. 20 years from now, you see a bigger difference, and 30 years it'll be a much bigger difference, and then 40 years, there's an insane amount of difference. With compound interest, you can expect to make $2.5 million if you were to invest in the stock market versus not investing in it at all, which would only save up to $600,000. What a big difference. And that's only because of compound interest. Now, why is it very important to actually invest early? It's not just because of compound interest, it's that you will gain a lot of experience trading your first couple of years. Okay? You'll make a lot of mistakes. You will learn what type of investor you are. You will learn what type of risky investments you can handle. That's why I highly suggest that you invest as soon as possible so that you learn from your mistakes and that you don't make the mistakes in the future, which could cost you thousands, if not millions of dollars. Now, the next thing you got to consider before you start investing is actually where you are in terms of your debt. Do you have credit card debt that have very high interest? Maybe it makes more sense to pay off that first before you get started investing. Now, how do you actually invest? Well, the very first thing you got to do is save some money. You can't invest without having any money. So that's the first thing you got to do. Either work a job or do some side hustles that will give you some income from exchanging your time. Now, the next step you got to do is find a brokerage. I personally use E-Trade and Robinhood. There's many other kind of brokerages such as Fidelity, TD Ameritrade, Webull, just to name a few. To open a brokerage, it's simple as downloading an app. So for Robinhood, for example, all you gotta do is go to the App Store, download the Robinhood app, and then open an account. Once you have your account activated, you transfer some money from your bank account to Robinhood, and then when the market opens, you can now buy and sell stocks. Now, my next advice before you actually buy your first stock is to educate yourself. I remember when I was much younger, I read lots of books trying to figure out what is a PE ratio, what is earnings, what is net income, what is receivables, all that good accounting term. And that is just one step to getting better with investing. I highly recommend reading books such as The Intelligent Investor by Benjamin Graham. That is my favorite book about investing of all time. And my last advice is actually do your homework before you buy any stock. This might involve doing some technical analysis or fundamental analysis, reading articles, watching the news, doing whatever it takes to find the good strategy for you to buy stocks. And over time, you'll figure out what kind of strategies you like, what strategies work, what strategies don't work for you, and what type of investor you are. And that just comes with experience. I remember the first time I heard about stocks and the stock market in general. I was about 10 years old. It was around 2007. I was in a special class where a professor was starting a trading game for all the students. And I remember buying Build-A-Bear Workshop for like $5. I don't even know if that stock exists today. Last time I've checked, it still does, but yeah. But it was very interesting to me. And these are the things you need in order to get started with investing. I hope you guys find this video very informative. If you could do me a big favor, go ahead and rip that like button and subscribe to my channel. Leave down a comment below on how you got started investing and what are some things you've learned over the years. And if you're new, tell us what is it that keeps you from investing. Thank you. Hope you guys have a good day, and I'll catch you later. See ya.